Camtek delivered record second quarter revenues of $133 million, up 10% sequentially and exceeding guidance, alongside a gross margin of 51.4%, operating income of $36 million, and diluted earnings per share of 78 cents. High-performance computing and AI applications represented approximately 75% of revenue, driven by accelerating adoption of the new Eagle G5 and Hawk platforms. Year-to-date order intake has surpassed $600 million to 80% targeting advanced packaging, propelled by HBM4 transitions, 2, 5D, 3D IC capacity expansions, and over 50% participation from OSATs. Management projects third-quarter revenues between $158 million and $160 million, over 30% second-half growth compared to the first half, and expanding market opportunities in silicon photonics, alongside high-resolution backside inspection and microprof metrology launches. Brian Chin of Stifel sought clarification on the advanced packaging revenue mix and manufacturing readiness. Management confirmed that advanced packaging is expected to reach 80% of total revenue by year-end, with fourth-quarter advanced packaging revenue expanding 70% relative to the first quarter. Operations are fully prepared for the production ramp, utilizing established supply chains and European manufacturing capacity without delivery bottlenecks. While a small number of current orders apply to 2026, the vast majority of ongoing bookings schedule into 2027, backed by favorable average selling price trends as Eagle G5 and Hawk deployments increase. Matt Prisco of Cantor inquired about early 2027 visibility and market dynamics in China. Management emphasized that receiving 20 and 27 orders this early in the year reflects strong customer commitment and planned capacity expansions. While specific numerical targets for 2027 are premature, order momentum provides a solid foundation for continued growth into next year. Camtek's business in China remains stable and supported by ongoing local semiconductor investments. James Schneider of Goldman Sachs raised questions regarding DRAM and HBM exposure alongside operating expense trends. Management detailed that HBM customers account for more than 20% of the $600 million year-to-date order total, with substantial additional forecasts stretching into 2027. Operating expenses will rise at a slower pace than revenue growth, providing operational leverage that drives margin expansion. Research and development spending will account for most of the expense increase, incorporating costs from the visual layer acquisition. Vedvati Shrotre of Evercore asked about the addressable market for silicon photonics and the timing of 2027 order flows. Management noted that photonics accounts for 5% of the $600 million, split between silicon photonics and compound semiconductors for transceiver components, with higher revenue contributions expected in 2027. Full visibility into the first half of 2027 will take 1 to 2 more quarters to consolidate, though customer signals regarding capacity expansion remain positive. Denis Pyatchanin of Needham requested updates on non-advanced packaging applications and specific margin targets. Management highlighted stability in non-advanced packaging markets with isolated growth drivers, including recovery signs in CMOS image sensors and consumer segments. Gross margins are projected to expand from 51.4% in the second quarter to between 53% and 55% by year-end, while operating margins are expected to rise to a range of 30% to 32%. Michael Mani of Bank of America addressed OSAT capital expenditure growth and the evolving competitive landscape. Management pointed out that OSATs represent over half of total order intake, reflecting strong alignment with back-end industry spending. Despite competitive noise, Camtek maintains its leading market position through established customer relationships and advanced technical capabilities across key manufacturing nodes. Shane Britt of Morgan Stanley asked for a breakdown of growth rates across advanced packaging and HPC segments. Management clarified that the advanced packaging revenue is targeted to grow approximately 45% in the second half of 2026 compared to the first half, with fourth-quarter advanced packaging revenue rising 70% over the first quarter. High-performance computing continues to constitute the majority of advanced packaging demand. Ed Yang of Oppenheimer questioned whether second-half's growth stems from overall market expansion, share gains, or increased process intensity. Management attributed the growth to a combination of market expansion and process intensity, driven by shifting layer counts, new step requirements in HBM4, and the introduction of advanced inspection modules. Market share remains stable, while high customer utilization rates continue to generate demand for additional systems. Gus Richard of Northland inquired about book-to-bill trends and order timing across the second quarter. Management indicated that the order momentum accelerated continuously throughout the first half of the year rather than spiking in a single quarter. Strong booking momentum is continuing into the third quarter, further extending order visibility well into 2027. Camtek's structural alignment with AI compute infrastructure and expanding inspection capabilities position the company for sustained multi-year growth.